So my next guest tweeted this, folks. Look at this, September 15th, 2020 by MicroStrategy, basically making an informal Bitcoin ETF. Any stock fund manager or institution or rando investor can buy MSTR for indirect Bitcoin exposure and yet remain within their mandate, since ostensibly it's just a normal stock. Well, if you listen to that strategy, you'd be up more than 900% right now. Let's bring in Lyn Alden, investment strategy founder and author of the new book, Broken Money. Lyn Alden. Lyn, I tell you, no wonder you got a fancy studio. But congratulations on the call. By the way, this all of a sudden, this massive, new exuberance for Bitcoin, particularly from areas of the investment world that were sort of just completely standoffish before. Is it net a good thing, or should we be concerned?
So I think it's a good thing overall. I think that as the Bitcoin network grows and reaches its total addressable market, it's inherently going to get institutional interest. I think we saw a little bit of kind of forward-thinking institutions in the prior cycle, but I think this cycle is the one for a larger, more normalization of institutions getting into the space. And, back then there were very few vehicles for investors to express their bullish view on Bitcoin. Other than owning it directly, there are a lot of pools of capital that couldn't. And so GBTC as a trust or MicroStrategy as a stock were the main ways to access it. But now there's a variety of ETFs and other portals into the asset. And I think that's only going to grow long term.
The title of your latest newsletter is Economic Reacceleration. You talk about this sort of tug of war between loose fiscal policy, tight monetary policy. Where are we right now with that? Of course, we got a major economic data point out again tomorrow. We just got the budget, $7.3 trillion. So the spending part is not going away. I don't know if Jay Powell took a shot after he saw that or not.
Yeah, I think long term, the fiscal deficit is pretty much baked into the cake. I mean, basically, regardless of election outcomes, regardless of other things, a lot of this is demographics driven. A lot of it is built up over a long period of time. And so that's kind of a constant multi-trillion-dollar deficit, which is a background stimulus for certain parts of the economy that are receiving it, but it's also kind of structurally inflationary. And the tight monetary policy can restrict some areas of the economy, particularly the interest rate sensitive areas, commercial real estate, all the usual names. But the problem is that when the public debt is so high relative to the size of the economy like it is right now, the higher interest rate also blows out the deficit significantly. And so the overall monetary policy becomes somewhat less effective at cooling down the economy or cooling down inflation than it would if there was a lower debt environment. And so one of the reasons I'm bullish on assets like Bitcoin or gold or, say, energy stocks, for example, is because I think we have this kind of structurally bullish backdrop for monetary inflation and for harder assets.
I saw where you retweeted someone was reading a passage in your book, Broken Money, and it was really amazing because it talked about the Bank Secrecy Act. And of course, that's when we started, we had to start. This is 1970, by the way. And 10,000 became the threshold which banks had to notify the federal government. It wasn't adjusted for inflation. Same thing we saw with the alternative minimum tax, right? And I mean, it's just nuts because it's just we have an intrusive government that's looking over our shoulders, and people are really concerned about that. Of course, now maybe it doesn't matter if you're going to look at $600 on transactions on also these payment services.
Yeah, so 50 plus years ago, when that rule was put into place, $10,000 was more than a family would spend on like a car, for example. That was worth over $80,000 in today's value. So that was a very rare type of transaction to surveil. But over time, like you said, because they did not adjust that for inflation, that shrunk over time. And if we go another 50 years without adjusting for inflation, that could be the equivalent of under $1,000 that has to be surveilled. And so generally speaking, the overall financial system has become very permissioned. It's become very surveilled. And then you can extrapolate that globally, right? There's 200 countries roughly. Many of them are even more tightly controlled than U.S. banking system. And so when you have an asset like Bitcoin that's a global asset, so people in all these different countries can access it, they can escape their debasement, they can escape their kind of bank controls. It's rational for people to do that, even when they don't have to have any sort of nefarious reason for it. It's just that in a lot of countries and a lot of jurisdictions, people want to own their own asset, and they want to have rule of law relative to their assets rather than things like arbitrary bank freezes or ubiquitous financial surveillance.
And of course, there are countries like China that actually attach it to social scores, and that's taking it to an even deeper extreme. Lyn, congratulations.
Yes.
Great stuff as usual. We appreciate you. Thank you.
Thanks for having me.
Hey, folks, we're still